Good morning, everyone. You are watching a live daily market outlook for Wednesday, 21st of March 2012. The markets are, most of the instruments, basically rather in the sideways movements with slight trend establishing trend up establishing on euro and sterling, as dollar yen remains in the sideways movements, and the dollar Swiss is still hesitating after hitting some fresh lows. Crude oil remains under pressure, currently standing at 106.60 off yesterday's lows, below 106, while gold is still under pressure, though a slight recovery is seen after the dipping low to 1641 yesterday. Currently it's around the 1650 zone, but the overall outlook remains still under pressure. The euro edged higher against the US dollar during the Asian session, mainly on short covering, while the yen was mostly weaker, with traders eager to add to bearish bets against the Japanese currency. The Japanese currency dipped to a fresh 5-month low versus the euro and hit a 9-month through against sterling, staying on the defensive in the wake of the Bank of Japan's monetary easing last month. The market is a little bit short euros, so that's what is driving it, is the comment of one of the analysts. The euro's rise might stall around 132.90, 133, which is our next upside target, adding that single currency could possibly squeeze a bit higher if the 133 is breached. These are the comments from the analysts of this morning. The euro's latest rise came in the wake of its drop to a 1-month low near 130 level that was seen last week, when the dollar rose on fading expectations of further monetary easing by US Federal Reserve after modest brightening of its economic outlook. One factor supporting the euro is a narrowing in US-German 2-year yield spreads, and this is now roughly 5 basis points down from around 17 basis points at one point last week. The analysts expect the euro still to the upside, but the gains might be limited so far, and 133 is our next barrier, clearance of which actually is required to bring some more light into the current outlook of euro-dollar. From the other side, the Federal Reserve Chairman Ben Bernanke yesterday said he welcomes an easing in Europe's financial troubles, and said the US Central Bank would be ready to act if conditions worsened again. In the past few months, financial stresses in Europe have lessened, which has contributed to an improved tone of financial markets around the world, including in the United States. Bernanke said in the testimony prepared for delivery today. Bernanke also said the U.S. financial institutions have some potential exposure to losses from the credit default swaps they sold to protect against possible European sovereign debt default. But he said major U.S. banks are not vulnerable for now. From today's calendar, MPC UK's MPC meeting minutes are due at 11:30, and no change from the previous configuration of voting expected for today. At the same time, at 9:30 GMT, we have the public sector net borrowing that is expected to increase to 5.2 billion pounds compared to minus 10.7 billion pounds drop in the last month. And that was all from Europe. From Americas, Canada starts at 12:30 GMT with the monthly leading index, 0.5% forecast for today, lower than the previous month release at 0.7%. The Fed Chairman Bernanke is due to testify at 13:30 GMT, and at 1400 GMT are U.S. existing home sales that are expected to show some improvement. Today's consensus is 4.61 million units compared to 4.57 million of the previous month release. U.S. Crude oil inventories are due at 14:30 GMT, and another build in the U.S. crude stocks is forecasted for today by 2.4 million barrels compared to the last week's build of 1.8 million barrels. Now we're going to take a look at the markets and see the latest movements in the currencies and commodities. As we can see, the euro remains in the steady uptrend of 130.00 base as seen last Thursday. After yesterday's close above 132 handle and a break above yesterday's, 2 days ago high at 132.64 and subsequent corrective easing finding support at 131.71 just ahead of important level at 131.41, opening way for fresh extension higher that peaked during the early hours of today at 132.82, just short of our upside target at 132.90, which is the previous high of 8 of March, and 132.90 and 133.00, 61.8% Fibonacci retracement of 134.85 to 130.00 decline. The near-term studies remain positive as shown in the 4-hour chart, as all studies are pointing higher, and the recent crossing of 20 days above 55 days exponential moving averages supports the current rally. We need to see break above 132.90, 133.00 in order to confirm the bottom at 130.00 and the open way for next static resistance and the previous strong support and break point at 133.55, 133.65 zone high of 1st of March and the low of 27th of February, clearance of which is likely to open way towards a key short-term barrier and double top at 134.85, highs posted on 24th and 29th of February 2012. On the downside, immediate support has already been tested at 132.50-60 zone, with the next one yesterday's intraday low at 132.14, ahead of what is also the 55 days exponential moving average as dynamic support, while only break below 131.70 yesterday's low and strong support that is expected to contain dips to maintain the current strong bullish structure is offering the next strong support, and corrective pullback further extension lower is expected to reverse above this level in order to keep the bulls in play. Otherwise we might see the way for further easing. This is also close to 38.2% retracement, further easing to target next strong support at 131.41, loss of which is to delay short-term bulls. The daily outlook for a single currency against US dollar is still in the negative territory, but shows signs of improvement as the studies are approaching their midlines, as the pair holds above 20 days moving average on the daily chart, and they're looking for a break for our next barriers 132.90, 133.00. On the these are basically the break of these levels is required to improve the daily structure and possibly open way for a test of next strong barrier and the double top at 134.85. Cable is still in the consolidative mode after hitting a fresh high at 159.13 2 days ago, as the strong rally cleared some strong static resistances at 158.30 and then 158.80, also breaking above 200 days moving average that is currently standing at 158.56. The pair's near-term price action still holding above this broken moving average that offers now initial dynamic support, and while holding above this level keeps the prospective keeps the possibilities and hopes of further gaining, with the current price action attempting at 159, and we need to see the break above 159, 159.13 in order to resume and confirm the recent break higher and possibly to refocus recent highs of beginning of March at 159.74 and the end of February at 159.91. That will open way for further extension higher. The daily studies are attempting through their midlines, and while holding above 200 days moving average, the near-term focus remains at the upside as the pair is in a strong rally of 156.00 base low posted on 12th of March. After the strong weakness of 159.91 broke below 156.50 and the bottom so far at 156.00. Clearance of 2 days ago high at 159.13 is to confirm and open way for a further extension higher. The near-term hourly studies are gaining momentum and seeing potential of further expansion higher with the 55 days moving average currently at 158.50 as dynamic, and the 158.30 yesterday's low as static support, expected to contain any dips in order to keep the current positive structure intact. The dollar yen is still in the sideways movements after hitting fresh high at 84.17 last week, with the pair entrenched within the 83.00 and approximately 83.40, 83.80, 83.90 range. Slightly, the current structure is slightly turned towards the upside as the studies, hourly studies, are still holding above their midlines, but still moving in the neutral mode. And we need to see clearance of 83, 80, 90 barriers in order to reattract 84.17. The daily structure is still in the positive, however, quite stretched studies and extended above their and in their extreme levels are suggesting that further easing and the corrective action of the broader uptrend from 76.00 base to 784.17 is not ruled out at this point. So far, near-term studies remain more supportive, and if we see the break above 83.80, 83.90, we might be looking for a test of 84.17. But the break of either side is to define the short-term direction of the pair. On the upside, we have, let's say, 84, and on the downside, 83. Loss of 83 would signal some stronger correction that will weaken also the, it will actually signal on the daily chart that stronger correction of the latest rally is underway. The dollar Swiss is still in the downtrend of 93.33 high of last week, with the 93.78 seen so far, just ahead of static support at 90.69 low of 8th of March. The latest reversal has so far retraced exactly 61.8% of the uptrend from 89.30 double bottom that peaked at 93.33. Near-term studies remain negative and keep the downside favored, with the hourly structure seen capped by immediate cap at 20 days moving average at 91.00, the level that was tested overnight and this morning, but failure to break higher keeps the downside in focus as the pair's price approaching the overnight low at 90.78, loss of which to open way for 90.69 and possible further extension of the short-term downtrend with the next static support seen at 90.20 and the 90.00 as round figure support. On the upside, as mentioned, 91.00 offers immediate resistance ahead of 91.20, where is also the 55 days exponential moving average, while only break above 91.50 high of yesterday and the low of 16th of March, which is the near-term break point, would avert immediate downside risk and open way for a stronger recovery. For now, the focus remains on the downside as studies on the near-term are still in the negative territory and pointing lower. Gold is attempting to recover of low of yesterday at 1641, but the gains seems to be still limited at under 1660, 1657, 1656 and today's high at 1658. Basically, we need to see the break above the recent range as the gold price action in the past couple of days is seen entrenched within the narrow range and moving sideways with no direction seen at the moment. Upside break above 1669, which is the high of Monday, is required to signal some stronger recovery on the bounce from 1634 low of last week, and to open more significant barriers on the upside. 50% retracement at 1675, previous high at 1682, and the 1685 is the 61.8. The Fibonacci retracement of the latest down leg from 1716 down to 1634. However, on the 4-hour chart, the situation is more negative as studies are still holding below their midlines, and as long as 1669 and 1670, which is 55 days exponential moving average, cupping the upside, downside remains vulnerable. Loss of 1641 opens immediately 1634, below which is to refocus to focus 1625, Fibonacci 61.8% retracement of the uptrend from end of December 2011 at 1522 that peaked at 1790. The daily structure remains still negative as all studies are below their midlines and still pointing lower as the pair broke below the main bull trend line and 200 days moving average, and holding below moving average, which is 1683, along with the 61.8% retracement of the latest down move. The focus remains on the downside and the price action remains under pressure. A quick look at the crude oil, basically similar situation as the oil price is still within the range as some attempts higher again failed. The initial barrier of 108.20 has been cleared briefly by 108.30, and yesterday's extension higher to 108.68 again was short-lived as the price dropped below 106, 105.69 was the low of yesterday, keeping the pair within the 104.30 and the 108.68 range. These are the two extremes posted yesterday and last Thursday, as the 4-hour chart shows that the price is still under pressure, holding below both 55 and 20 days moving averages, with the studies rather neutral at this point. On the daily, the strong uptrend that peaked at 110.53 is still in play, as long as current range low at 104.30 and the main bull trend line at 103.40 hold the downside, seeing potential for further extension higher. However, a loss of momentum on the daily studies sees risk of further easing of the pair and possible test of previously mentioned supports 104.30 and 103.40 trend line support, and also this 103.70 is the previous range ceiling, and then we have 103.40 the trend line support. So strong support area is seen between 104 and 103, and if we lose these levels, it might be risky for the oil price, and they might keep the upside intact for the short term and allow for a deeper reversal. Have a nice day.